Hello and welcome to the look ahead for Thursday, the 2nd of November with me, Fiona Cincotta, Senior Market Analyst at City Index. So jumping straight in with what we will be looking at on the economic calendar tomorrow. First up, Eurozone manufacturing PMI data for October. This is the second reading, the final reading. We're expecting it to confirm the preliminary print of 43. That's down from 43.4. in September. This is well below the 50 level, which separates expansion from contraction and suggests that the manufacturing sector is acting as a drag on the Eurozone economy as we enter into the fourth quarter. Next up will be the Bank of England interest rate decision. Now, the money markets are pricing in around a 97% probability that the Bank of England will leave interest rates on hold at the 5.25% level. Now, the meeting comes as the UK inflation remains relatively sticky, up at 6.7%. That's well above its peers such as the US and in the Eurozone. And with that in mind, the Bank of England will most likely look to keep the option for further rate hikes on the table. However, with the growth outlook looking rather gloomy, if we just consider the latest PMI data in October, we saw another contraction in business activity, and that marked the third straight month of contracting activity, which doesn't paint or doesn't bode well for future growth. In fact, growth forecasts are going to be very much in focus with the Bank of England tomorrow, and we could well see a downgrade in those growth forecasts. Now, what does all this mean for the pound? The pound has been trading in a symmetrical triangle against the US dollar in recent weeks. And we've seen that just lately, though, it's struggled to push above the 20 SMA, and that combined with the RSI below 50 does favor a break to the downside of that symmetrical triangle. So if we do see a break below that 120.80, which is that rising trend line support, then we could see a test of the October low at 120.40 and down onto 120, the psychological level. On the upside, if we did see a break above that 20 SMA, then we could see prices look towards the upside of 121.80. Now, moving on, as well as the Bank of England, we've got some data from the US, which comes after today the Federal Reserve left interest rates on hold. US jobless claims will be in focus. They're expected to hold steady at 210,000. Obviously, they come ahead of the non-farm payroll data on Friday, and also after ADP data that we had today, which showed that private payrolls increased by 113,000. That was less than the 150,000 forecast, but still above 89,000 that we saw in the previous month. And then finally, we've got Apple Q4 earnings. Now, Apple earnings are expected to show a 1% decrease in revenue to 89.27 billion, and EPS is expected at 139. That was up from 129 in the fourth quarter of 2022. The focus here is going to be very much on iPhone sales. iPhone sales are expected to rise around 2.3%. Again, how will they be doing in China? That will be another key focus. But the big question, I think, is are iPhone sales and growth in the service sector or the service business of Apple, are they going to be strong enough to overshadow perhaps weakness in wearables, the Mac and iPad sector? So just having a look then at the Apple chart, we can see that the Apple chart has been trending lower. It's trading in a downward channel. Now, it did find support there at that 165 level, and it's rebounded higher and is just looking to retake the 200 SMA, which is going to be key to the price being able to push further. So if we do get a close, particularly above that 200 SMA, then we'll be looking to expose the 100 SMA at 177.60, and then that will bring in the October high at around 180 US dollars. Failure to really push meaningfully above that 200 SMA could see the price come back down to test the 165 level. Thanks very much for joining me. Lots to be looking at tomorrow. If you like the video, please do follow.